Hi everybody, my name is Adam Meyer, and today I'm back here with another video, and we're going to go over the CPI numbers that are coming out tomorrow morning at 8:30 Eastern Time. And basically those give the inflation numbers from the month of July. So once the month was over with, they need to get the numbers together to measure the inflation. So if these numbers are lower, that is actually expected to happen. It's supposed to be below overall below 9.1%, but on a month over month increase, it's supposed to be 0.2%. And those will actually show the signs that the Fed is doing well with raising interest rates, and it's actually getting prices down. So what happens? The energy in the CPI actually holds a majority of the inflation. So what we saw last month was the commodities go down with oil and gas. So that is why it's expected to be lower. So let's get into this here. We're going to show you how I trade it, and maybe you could take advantage of it. Not a financial advice. And then we can see how we can invest long term with these numbers. So let's get into it here. So where I get my information is here on forexfactory.com, and through here we can basically see that the CPI is coming out tomorrow on Wednesday the 10th at 8:30 a.m. Eastern Time. But here on July 13th, it came out to be 1.3% higher with a forecast of 1.1. So that inflation over 1 month was 1.3%. And over on bls.gov, you can actually go through and look at all these numbers. So if you're looking at the food prices, the energy prices, and if you look at the energy, it actually makes up a total of the entire CPI read. So inflation came out of the total of the last 12 months. It totaled to be about 9.1% inflation that ended in June. So if we're looking at all this energy prices, that holds the majority of the inflation read. So next month, well, this report that's coming out tomorrow will be for July. So the month of July happens, and then the inflation is calculated, and then it's reported. So it's actually reported to be lower because energy prices went down, gas prices went down, oil prices went down. So that's going to reflect on the CPI read tomorrow. So if we go back and look at the last report that happened on July 13th, we can actually go back to the chart and see where that took place. So July 13th was about right here. And there was a massive move during that time, because when these new news releases comes out, like, you don't really want to be in the trade unless you're using like lower risk. So let's say you normally risk 1% per trade, but you want to go for like maybe like a 0.25% risk, because you never really know where it's going to move. Yes, you can have your markup, but it could either go in any type of direction. So when this news was released right here at 8:30, there was a massive push higher and then a push down, and then that took out all the sellers that were selling right here, and it took out all the buyers that were buying down within here. So it just kind of whipsawed price around. So what I like to do, I like to wait a little bit longer for that to actually happen if I'm going to day trade this. So this video is basically formed around if you're day trading it. So the overall report is going to be inflation, and then the markets react. But if you're day trading it, you want to look after. So you want to look after that news comes out. Like, that's what I like to do. And then I look for these break of structures. So it came down lower, and then yes, it could keep coming lower. It could keep coming lower, but I really like to see a nice break of structure that goes with my plan, and then I enter on a retest of a zone, because now price could have kept coming down, but it's actually failing to come down. Therefore, it's breaking structure above this high to then test to go higher, and then you can capitalize on a move like that. Not financial advice, obviously, but that's what I like to look for during these news releases. If we look at the overall bigger picture for tomorrow, we don't really know what's going to happen with the news. So let's say the news is good. Let's say inflation actually does come down very, very much. Price could actually come down lower to take out all the buyers, and then price could rise. Or the news could be very, very bad, and price will go higher to take out all the sellers and then come down. So all we can do as traders or investors, any way you want to like look at this, I look at it personally both ways. I like to trade, and I also like to invest. So investing, I'm just long term, I'm buying and holding, and I'm just buying good deals. But trading, I'm looking at these kind of levels. So what am I seeing here on a weekly time frame? I'm seeing a nice gap sitting right there, nice fair value gap. And we could retrace down within this gap in some point to then work our way up higher into there. So I want to keep that in the back of my mind, that there's a gap down there that we can come to. But when the news comes out around 8:30 in the morning, I'm going to look at certain price action that happened overnight. So I'm recording this the day beforehand on Tuesday. So on Wednesday morning, the news comes out, and there's all overnight price that I need to work on and look at. So I'm keeping that gap in mind that is sitting right here. That's what this gray box is across. So I'm keeping that in mind, that we can come down there. But in the short term, we could actually work our way back up within these ranges, up within here, or even come up within here to then have a short down within there. So that's normally what I'm looking at. But on the long-term scale of things, if we do see the inflation come down, then we're going to be looking long-term for the market to keep going higher up into these ranges up within here, where this fair value gap is, and up into here. And if we do get up into these areas, that's going to be a catalyst from the CPI read from tomorrow and also the news coming out the next day. And then in September, they're supposed to raise 0.75, I believe, interest rate hikes. So they're actually looking to get this inflation down. So we're just trying to pick the peak of inflation. So if we do see inflation come down this month, that means last month was the peak of inflation, and that is going to be good for the markets. Lastly, I want to pull up an oil chart. So this oil chart I had marked up when the war actually started. We're actually back down to those levels. I don't know if a lot of you know that unless you really look at oil and pay attention to it, but we're getting back down to those levels to where from where the war like first started. So this is the end of February over here, and then the war was starting to pick up within this area. So we saw a massive spike in gas prices and oil and whatnot. But over time, I'm just looking at price. So it's working its way higher. It's coming up above this high. If we use the Fibonacci retracement from this high to these lows down within here, actually get the high on there. We're actually sitting around this spot in this red box. So then that's where I was looking for basically a break of structures and slowdown and exhaustion in price, which we did get. We're making higher high, then we started to break structure, lower high, break structure again, started to test up in here, and work our way back down lower. So what is going to happen, this next CPI read is going to have the results and the reports from oil. So that's why most of the CPI is energy. So this is going to have a huge influence on that read tomorrow, and that's why CPI is actually expected to be lower, very much lower than it was the month prior. All right, I'm going to wrap this video up here. So basically, we're going to look for CPI to come down tomorrow with a news report so you can trade it, you can invest long term. Basically, we want to see this come down, and it's going to show the peak of inflation. But if we do go higher and inflation actually is higher than expected, then the markets are going to look at that as bad, and the Fed needs to raise rates even higher than expected before. So that's not a good sign for the economy, because it's going to slow things down even more when we already had 2 consecutive quarters of negative growth of the economy in the US. So we do want to see these numbers come down, and that's what I'm looking for. If not, oh well, but we'll be able to trade it either way. So take care, everybody.